Okay, good afternoon. Today is July 21st. It's Friday around 1:15 Pacific time, just after the market closes. This is your weekly take on the market. My name is Scott St. Clair. I will be your host. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I am not licensed. Nobody at IBD is licensed. I can't tell you what to buy, what to sell, how many stocks to own, how much percentage you should have in a stock. These webinars are vetted for compliance, so I am able to speak a little bit more freely on them. So you will get a little bit more of that on a webinar than we're allowed to say on, say, an email or over the phone. Okay, we'll do the market thoughts. We'll do the industry group stocks to watch, and then quote of the week. So market thoughts. I really like this tweet by Cuppy. Said he'd been reading Q2 23 quarterly LP letters, limited partnerships. That's what a hedge fund is set up as, a limited partner. Let me summarize for you. Dear clients, 7 stocks went up this year. We didn't own any of them. Oops, sorry. See you next quarter. I find it ironic. It's kind of funny that, everyone will complain that, the market did this or the market does that, rather than just go with it. If the market just is continue to do the same thing over and over for long stretches, why fight it? Why not go with it? Because especially when these 7 stocks are highly liquid, they're great names, easy to get out of, easy to get into. I don't care if you're managing $1 billion, they're easy to get out of and easy to get into. So it's just kind of how the market works. If you were an Apple, Google, Nvidia, Meta, you're not going to get fired for owning those stocks if something goes against you. And then if it goes for you, the performance would have been great this year. So look, I didn't do this myself, so it's something I could have done for my own money as well. So it's hard. I'm not saying it's obvious, but I find it fascinating a little bit that people will complain about what the market's doing, especially especially if it does it over long stretches where you could participate in those long stretches of the market doing the same thing over and over. So let's pull up the indexes. That was all I had as far as screenshots. And so here's the NASDAQ. I don't know if today, probably because of the rebalancing, it was probably a high volume day. So you might have, is it going to, boy, it's barely going to qualify as a distribution day. It should be very interesting to see what the IBD does. But I think we're at a key level, a key moment in time for this market. It's very stretched from the NASDAQ point of view. I think I was just comparing my performance versus the NASDAQ and the S&P. And I think before today, I think NASDAQ was up like 34% for the year. And the S&P was mid double digits, 14, 15, something like that. So we're at a key level here, I think, for the NASDAQ. If it undercuts this, you could have kind of what I'd call a failed breakout of a nothing. Let's see, like the QQQ. So Bill would often talk about, if a stock breaks out of a nothing, it should be sold. And what a nothing is, this looks like a cup with handle, very symmetrical, very, actually, if this was 70 days long, it would be like a perfectly symmetrical cup with handle, not as deep, but imagine a little deeper. But it's really a nothing. It's too short to be a flat base. It's not deep enough or long enough to be a cup with handle. So it's kind of a nothing. And when stocks would break out of that, he'd often point to chart and say you should sell some right there when it breaks out of a nothing. And I'll show you a perfect example in Microsoft. Let me write this down. So this is key. If this turns out to be a breakout of a nothing, I think you could have a period of underperformance in NASDAQ and in tech stocks. And maybe the market switches to other stocks, or maybe we go into a correction. I don't know. I don't think we're going to go into a big bear market. I think the lows are probably in, but I don't have to make a bet on that. But I think the probabilities are high that the lows are in. But if we correct 10, 12%, let's just say 10%, 387, and we go down the 39 points, so to speak, that puts you down here at 348, which wouldn't be all that bad, right? You could get a little undercut of the moving average, then the moving average would come back, and then you could have a bounce back. I don't know. I'm just kind of game planning for what could happen, but I'm very, very, very light on the NASDAQ tech side. In fact, I'm probably at net negative exposure with my shorts versus my longs on that are NASDAQ related, like NVIDIA. I think NVIDIA might be the only one that would really consider like a NASDAQ related, and it's a very small position now. So I think this index is going down. That's just what I think. I don't think it's going to collapse. I don't think it's the end of the world, but I think the market was a sell. And I tweeted as well with Microsoft and Tesla and Apple. If not now, when? If you're not a seller of strength now, when? And every day they come out and give you their new AI play. It's just become a little bit too frothy. So the NASDAQ, I think, is under a little bit of distribution. We'll see how it plays out. The S&P, I think, is going to hold up a little bit better because of the composition of that, and you can see it looks a lot better. So let's just use the 21-day, which is this pink line. The S&P is 2% above it. Let's see where the NASDAQ is. 1.4% above it. It's probably, I bet if I backtracked, it's probably the first time in a long time that the S&P is higher above the 21 than the NASDAQ. So you kind of seen it slowly but surely develop. The Russell IWM, it looks okay. I don't really watch the Russell too much. I don't really watch the other ones. I try not to. I know that like a moth to a flame, we're all attracted to what the indexes are doing, and so I know that they're out there. I try to make my decisions based on each individual stock, what it's doing with, in the background, I know that the market is doing its thing. If it's not up or down more than 1.5%, then it's just kind of it's kind of normal noise, I think. Emerging markets, here's EMXC. This is emerging markets ex China. I like this one. I think taking out the China is both, good and bad. When it's good, it's really good. When it's bad, it's really bad. So emerging markets ex China might be a little bit smoother if that interests you. EEM is not ex China. EEM has Chinese exposure, so it's setting up a little bit. It never goes up, so I don't know what to make of that, but it just never seems to have any oomph. And the Dow is I think somebody said the Dow was up 10 days in a row. Let me just pull up the Dow. I think I saw that on 2, 4, 6, 8, 10. Yeah, 10 days in a row. And if I were to cover the name of the charts and just gave you this chart, I'd say, well, it's kind of a sleepy name, but very strong. But you can see the relative strength has been very poor, but finally it's just a tiny bit of outperformance. So the bottom line on the indexes, I think the NASDAQ is, you want to batten down the hatches. You want to know what you own. You want to be willing to withstand a pullback. Probably should have done some trimming. Hopefully you did. If you didn't do some trimming, you might want to consider trimming your positions, whether it's NVIDIA, SMCI, whether it's Amazon, Meta, Microsoft, Apple. They all look like it at worst trims to me, but that's kind of, that's based on my style too. So you have to consider yourself. Tesla, and we can, that definitely looks like a trim at best. We can go over those when we go through the stocks. Anything else? Oh, I know what I want to talk about. So FNGU is the 3-time FANG index. Now, it is a 3 times. I wish they had a single-time FANG index. I think it would be a little bit easier to interpret, a lot less noise, and you have the rebalancing with a 3-time S&P index ETF. The bottom line is when you have a levered ETF, it almost, and to the upside in this case, there is a FANG down. If it goes sideways, in essence, you are losing because pretend you're buying options and they're expiring over and over and over. So that's the problem with kind of analyzing these levered ETFs a little bit, is the index can do nothing and they can go down. But that being said, it's been rip-roaring bull market in this area. And FANGU is Netflix, NVIDIA, Microsoft. I mean, it is all of the best, biggest stuff in this most recent rally or last few months. And it bottomed at 36 and change, and it ran to 230 almost. So about just over 5-fold move. It is a 3 times ETF, so you take that into account, but it's a massive move off the bottom, and it just feels like this is tired. This area is tired. Let's go to the daily. You can see it broke out, and you have kind of a failed breakout, a breakout of a nothing, and this was the first to fail, which kind of had me getting even more cautious / bearish on the NASDAQ area. Not everywhere else, but on the NASDAQ in a few days ago, 2 trading days ago. So this is the first it led on the way up, and my gut instincts, it will lead on the way down. So this might be something to watch. I wouldn't trade this if I were you. In fact, I have been short this because of the volatility. Previously, I was short it. Back in here in the bear market. Not all brokers will let you short these. They're really hard to borrow, but I like the fact that you could be right. You have 3 scenarios and 2 of them are in your favor. It goes down, you're right, you win. It goes sideways, the index goes sideways, this will go down, you win. It goes against you, you get your head ripped off, right? So you have to size accordingly. It's always been super, super small, but you have the probabilities on your side of being correct with those. There's 3 scenarios, sideways, up or down, and you win on 2 of the 3 scenarios. You get the idea. So this looks like a sell to me, and that's that is influencing my feedback on the market. The FANG down, the chart's so broken that there's just nothing here, which is why it'll probably do another reverse split. And you can see, look at how terrible these products are. It's just nothing but down. And even in the bear market here, you had, and this is a monthly, so you had a big window, but you can see your window to make money in these types of products is very short term. So these are short term trading products, day 2, 3, 4, 5, if you're interested in that at all. All right, so let's go to the industry groups. So we have computer hardware peripheral, that is SMCI. We've got computer software database, semiconductors, auto manufacturers, Tesla, telecom satellite equipment. I don't really know why that group is so strong, but it's now 5 versus 9. So what I'll do this weekend, and what we can do now in real time, is pull up the chart, open up the related information panel over here, and you've got the top stocks, the ones closest to new highs. let's go ahead and click stocks and group. And you got BDC, Harmonic. These are all the biggest. Let's click this button, show all component data. And it's going to dump all the stocks that are in this group down below. Why is preformed line products number one? The combination of EPS and RS. 98.98 is higher than Belden, which is 85.91. PCTI is third. Why? Because 97.65 is less than 85.91, and so on and so forth. So the first few stocks are always kind of your best as far as our process. So if I pull up PLPC, and I have to admit, I've never heard of this stock. So it barely trades 16,000 shares. That's probably why. But really nice breakout here. Good earnings and sales, and it's really just trended really well. Let's go to Belden. That's probably a little bit more. So it's a little bit more liquid, but not a lot. 234. PCTI, it's a $5 stock. So you can see this is kind of a tough group. Right away, I'd be a little bit disinterested in this group. Let's go back to the industry groups. Software enterprises, media, building construction, 26.12.8. That would be interesting. I would review that group. Retail, wholesale, automobile. That's probably like Carvana, which has made a huge move. So I'd probably not bother with that, and so on and so forth. So that's something you should do. That should be like a once a week exercise. Where you go through this group, look for changes, look for the delta, and if there's something like you're unfamiliar with, or you can't building AC heating. I can't remember last time I looked at a group like that. You can walk through those steps. So I think the groups are fine. They tell a good story and have for a number of weeks to months. I think the group strength has been spot on. So let's talk about Microsoft, like breaking out of a nothing. So here's Microsoft. It's breaking out. Is this a double bottom? No, it's not long enough. Is it a flat base? Well, it looks like it qualifies as far as percentage, but it's 2, 4, 6, 8, 10, 12, 14, 16, 18. It's about 18 to 20 days, not long enough. We need 5 weeks or 25 days. So it's not a flat base. So it's a nothing. And when it breaks out of a nothing, it probably should be sold. I'm not saying you have to short it. That's something I might do or did. But I think if you're long Microsoft, then you want to, if you use strength to sell, you want to sell into this. If you're a long-term holder like Scott, I've owned Microsoft forever. I don't know. You have a high-class problem, as Tom Sosnoff said on the IBD podcast. And I'm going to go off on a tiny tangent. Listen to the IBD podcast with Tom Sosnoff if you're interested in options at all, or just in understanding that process. The IBD podcast this week was really, really good. So anyways, so it breaks out of a nothing. I think that's a sell, a trim, however you want to do. If you're super aggressive like me, I think it was a short. It was running into on news, this AI news, and at some point the AI news is baked into the cake, especially with something big and liquid like Microsoft. And it's been running for a long time. Now, if it breaks out of a 12-week base on that, I'm not going to short into that. But Microsoft has gone from 230 to 360. I think the market kind of knew, and it did exactly what I thought it'd do. It's turned out to be, just slowly but gradually gave up those gains. So that type of action, is probably a trim at best. Here's Meta. I think I talked about this previously. Like there, I know it's not perfect technical analysis as far as all the parameters. There's an art and a science to it. The art to me is top of the range sell. It's a sell. Another good one that look, if you don't want to sell all of it, that's fine. I understand, but maybe do some reducing. Give yourself some room to breathe. So when it pulls back, 13 and 9, what's that? 20 points off the high. Doesn't hurt as much if you've taken some off. Tesla. So Tesla, it's a little different, not quite a breakout of a nothing. It gapped up and then ran up, but then you had the bad break on earnings, and you can see the trend line that I had drawn to follow it up. And again, for me, I'm like a broken clock with Tesla, so I am short the stock. It's a very, very difficult short. It's a tough stock to be short. I've had last year I had tremendous success with it, but other years, no, of course. And this year so far has been very hit or miss. I think a mostly miss. So, but this trade, knock on wood, so far is working pretty well. So that looks tired, and it looks like probably should be trimmed. So you see the what's the message or the what's going on in all these stocks. Apple, I thought about shorting Apple into that as well, but I was already short Microsoft and Meta. I said, why do I need to press my luck? It's all the same trade a little bit, right? So again, breaks out of kind of a nothing, and it's given up those gains. So these look tired. Nvidia, I'm hoping, I think I might have talked about it last. I'm hoping that it breaks this trend line. I really want to shake out Nvidia, which is very strange to say because I do own some shares, but it's very small, and so I'm just begging for a shakeout, just to shake the tree a little bit. Not that I need a better price. I want not that I want a lower price than where I sold it. That's irrelevant. I want like a better price, a better type of entry, some type of shakeout. And it's not that far for it to get to this 50-day. Is not, that could do that in a couple of days. That's not out of the realm of that. So I'm hopeful that it does that. We'll see. But you had the rebalancing today, right? I don't know if Nvidia was involved in that, if it's too big, but I definitely know like Apple and Meta and Microsoft had to be rebalanced a little bit. They had just gotten too large. Amazon and Google, not really. They're okay. There's nothing wrong with them, but not really as prevalent as those others. So that's kind of led to my feeling, my thoughts on the Nasdaq as a general rule. It's a very strange feeling to be kind of negative bearish on one index and very constructive and long and looking for ideas on the other. Not that everything I look at, like it's like, oh, what exchange does it trade on? Because I never do that, but it's like the area that I'm gravitating to is non-tech related. They just look more timely, better setups, not as extended. Let's look at Netflix. So Netflix did gap down on the earnings. This is a little bit longer than Microsoft and Apple, but you get the same idea. Not much there. So I don't know. We'll have to wait and see how it plays out. As far as stocks, I might have mentioned Net. So I did try Net. I bought it this day and I bought more that day, and I got stopped out this day. So it just didn't work. And this was one, besides Nvidia, this is the other tech related stock that I owned. So I don't own that anymore. Tidewater, I'm trying to hold on, trying to be patient. Not a great week, down 2%, but that's not a terrible week either. Valaris, really starting to shape up. I like this one a lot. I wish that relative strength line was a little bit higher. So I had mentioned that previously. Like I know Noble and OII are already into new highs, but I've done so well with this stock previously that I tend to come back to it. So Noble, so you can see its RS line is a little bit into new high, but it's taken a while to get there. That looks good. And OII, see it's in new high ground, but not quite there yet. So I don't own OII or Noble. I do own Valaris. What are the other ones that I wanted to talk about? Let me look. Oh, NVO. NVO, that's the one I wanted to talk about. So it's not long enough. You got a little shakeout here. Maybe you wait for the flat base, but this looks like it's shaping up pretty good. Lilly is acting just fine. A little slower, but acting just fine. And was it Pfizer that had? So I think they had a tornado destroy one of their facilities, and I thought maybe that NVO was going up because of that. But if that was the case, then why did Pfizer go up? So I think NVO is just kind of going up because it's in the right area. So this is interesting. Schlumberger, that was one that I forgot to mention. They announced earnings today. They were up 44%. Revenue's up 20. It is decelerating a little bit from the previous quarter, but it's a huge, big, company. Massive. What's the market cap on Schlumberger? 80 billion. So this is, I think, is pretty impressive. 44 and 20, 85 and 30. It was it's hard, and I did own it through earnings, and at one point it was down as much as I think maybe almost two and change. And I was watching it when they came out with earnings at 7 a.m. my time, which is a half hour into the open. Stock started to tumble a little bit, and so then I was like, okay, well then let's get our orders ready. Do I need to sell it? And it kind of stopped going down, so I stopped watching it, and then then it went up a little bit. So it looks okay. It's actually, if you don't own it, the shakeouts are good unless you're in them, right? So this is actually good. You're in day 2 of a potential handle. Let's see the weekly. I think the pattern rec on the weekly will switch because it'll see this as a weekly handle. So you're going to go to a cup of handle on the weekly, and so you'll have a pivot of around 58 or so, somewhere in there. I like this name a lot. It's big, liquid, and if the infrastructure play is, I think, could be a new theme if the money's kind of sloshes from AI to something else. I don't know that that's going to happen. I think it's a possibility. I have the imagination that it can happen. And as long as it's acting okay, I can stay with it. If it goes bad, then I just get out. It's just that simple. I think that should cover it for stocks. I'm trying to think, is there anything that would be on anybody's radar that's really they're really jumping out? And okay, I apologize. Give me 1 second. Somebody sent me an email. They asked me a question, and I couldn't answer it from a compliance standpoint via email. And I did say I would try to answer it on the video. And I get so many emails. Gosh, I should have looked for this beforehand. Okay. Okay, I think this is it here. Okay. All right. So I have the question. So I'll address it. So that's all for stocks. Let's see here. I'm gonna pause the share. And we will go to the quote of the week. But first I'll address the question. So he asked, on my trading approach, having tried different techniques and markets, I recall from a video you didn't develop enthusiasm for options. Do you trade entirely using the O'Neill method? So it's a really good question. And the fairest answer, if you're going to force me to say yes or no, is no. But I try not to stray too far from that process completely. But I will buy stocks that are not breaking out of a base. I will buy stocks that have an EPS rating of 20. I will buy stocks where the quarterly earnings are negative, like Nvidia. And so if that means that I'm not using the can slim philosophy, then then I have to be honest. The answer is no. So I tried to. The can slim is like your base, your foundation to your, and there are a lot of things in that process that I never stray from, like cutting losses and things like that. And I tend to be pretty concentrated by Wall Street standards. I'm very concentrated. By O'Neill can slim standards, sometimes I'm not that concentrated. I can have a 5 or a 6 or 7% position. So I think you want to develop a system that you're comfortable with, that fits your personality a little bit or a lot of it. And Tom Sosnoff on the podcast, his answer was great about the idea that the idea in investing from can slim philosophies, you risk a little to make a lot, and you're trying to capture these big winners. Everybody's looking for the next model book stock or TML. And it's a dream of everyone's to buy Nvidia 10 and hold it to 300 or something. But to do that, you probably have to be wrong like 50 times to get that one Nvidia. And there are very few people, if any, out there that can be wrong 50 times and right once and trade that way. And Tom Sosnoff talked about that. He says, I like to, he takes trades with high probabilities of being right, knowing that every once in a while he might get might get hit hard on something using options. But he prefers it that way, where he's right like 65% of the time or something like that. So psychologically, I think it's very difficult to be wrong, big winner. Wrong, big winner. Wrong. I think I have a big winner all the way back. Wrong. I think I have a big winner all the way back. Wrong. And so that's very difficult to do. And I just found that I couldn't do it. And so it was frustrating. So I've tried to adapt and find a system that works, but also works for me. So I am trying to stretch my holding periods a little bit, and I have improved immensely since I came to O'Neill from 2010. My holding periods have improved so much from when I first joined them. They're not as good as I'd like them to be, or as good as some of the great ones out there like Jim Ropel, etc. But that's okay. I'm okay with it. And so as long as I'm performing, am I doing better than the market most of the time? Not all the time. Do I enjoy it? So part of this is I just love the markets. So I think that if you told me I could make 14% just sitting in the S&P, or 13% being involved in the markets, I have to admit, I think I would take the 13%, because it would be boring just to sit in the S&P and do nothing. So as crazy as it sounds, I think I would rather do it that way. I enjoy the process, intellectually stimulating, trying to find winners, trying to determine what the market's going to think and where everything's going to go, and why these companies should do well, and so it's just it's a great process, very intellectually stimulating, and I love it. So that's part of it, is why I'm so engaged in it. And being engaged in it and kind of glued to it, you tend to overtrade. So that's one of the downsides to it. So keep that in mind. I hope that answers your questions, and for your question about that, for those of you hopefully there was a little bit to that, something you can get out of that. So the quote of the week, I went to the William O'Neill Memorial at William O'Neill's offices yesterday. And it was really, really great event. They had a lot of great speakers. And so I thought I would give you just a little bit of, kind of what I took from what Charles and Scott and Steve Birch, who's I think he's the CEO of William O'Neill and Company, had to say. Yeah, Steve said Bill was performance driven. That was important to him, but he would change his mind a lot. And I love that. I love the fact that he can change his mind. And I think that for those really big funds that didn't participate in the 7 stocks, so to speak, the nice thing is you could have participated with the caveat that you can change your mind. So one of the great advantages to trading your own money is being able to change your mind. You don't have to answer. You don't have to explain why you liked something one day and got out of it the next. Or you came on TV and said that the NASDAQ was going to go down. And then 3 weeks later, you're long NASDAQ stocks. So you don't have to explain any of that. So it's a huge freedom and a big advantage in your trading to be able to change your mind. Charles Harris said he wasn't afraid to take risk, both in business and in the market. He would take massive market positions early on. Scott O'Neill would say, and Scott would say you rarely knew what his position was by his demeanor or the look on his face. So he could be fully margined in an Amgen, and those around him, besides those closest that knew the position existed, would never know. Wasn't like he was running around buying Ferraris when it was going up or breaking keyboards when it was going down. So he respected risk, though. He always believed that the markets were risky, and that was one of the they once, Charles, Mike, and Bill once made an infomercial, I think about 25 years ago or something. And they were talking about the infomercial and how it didn't really do that well. And one of the marketing guys says, I really don't think it did well because it was so honest. It told people, hey, the stock market's hard and, you might have to sell for a loss and all of this. And nobody wants to be told that. So that was part of it. So he knows and that the market's hard, but he wasn't afraid to take risk. And if you study and prepare and get better and become a better risk taker, you can materially improve your results. That's what he would always say. So last but not least, Steve Birch said his favorite part of how to make money in stocks is at the very end. It's the one final thought. You can definitely become financially independent once you learn to save and invest properly. My parting advice is have courage, be positive, don't ever give up. Great opportunities occur every year in America. Get yourself prepared, study, learn, and go for them. What you'll find, little acorns can grow into giant oaks. Anything is possible. You can do it, your own determination. And I remember reading this as a 25-year-old kid and just fired up, ready to go. Because here was this guy that had done it himself and was saying you could do it. And I'll tell you, if I can do it, anyone can do it. It's out there for you guys. It takes work, but it's out there for you. So Bill was a great stock market speculator for sure, stock market operator, a great businessman, but also a great teacher too. So he will be missed and life well lived for sure. Okay, everybody, here is the contact information, marketsmith@investors.com, 800-424-9033. Have a great weekend, everyone. We will see you next week. Bye-bye.